Hello, everyone. Welcome to Smart Investing. Excuse me for a second. Sorry about that. So, for today's video, this is going to be about the evaluations of the three banks here that I have that I'm looking at. So, we have RF, which is Regional Financial, ticker symbol WSBC, West Banco Inc., ticker symbol HFBL, also known as Home Fed Bancorp Inc. Now we're going to start from the bottom all the way to the top. This is going to be a full evaluation. Uh, I'm going to explain technicals, but partially, not fully, to not take up too much of your time. And then also, I don't know if lately people don't like the technicals. I mean, I barely get any views anyway, but um, I like to explain the fundamentals because typically I have more info on that. And then I don't have as much info as I do have for technicals. It's just enough, but I wish I had more. But, it is what it is. I can only work with what I have. So, um, yeah, if you like to learn more, I'm sure there's other channels. Uh, apparently, if if over time, if I get that more of a request where people want to see more technicals, then I will. But for now, I just want to keep it a little more standard without it, because I haven't had any um, luck with it anyway. I will explain a little bit of the quants, some strategies and stuff, so just very basic stuff. But other than that, we're just gonna review it like we always review it. So first stock up that we have is ticker symbol RF, Regions Financial. So we're coming to a close for the banking services sector. Got a list of about, I don't know, maybe 50 or less, maybe less than that. So it's coming to a close because I've been going after the banks for at least 2 years, at least. So, coming up in 2024, I will say this when it comes to the banking sector, since exclusively, I think I'm one of the few people on YouTube that have only gone over each and every bank evaluation, not just in general, say, oh yeah, the bank runs and this and that, but looking at which companies, each one, like, name by name, price by price, evaluation by evaluation. Um, I have to give myself credit, to be honest, because I saw it coming from a mile away. Uh, I do think in 2024, I strongly believe there's going to be a second banking crisis in 2024. Uh, I don't know when, I don't know how, I don't know um, the way it's gonna happen, but I see a second round coming. I see a second wave coming for sure, because a lot of these banks, they're just so much in debt. Their cash flows are awful. They're not keeping enough cash on hand, and then it gets me wondering if, you know, I don't know how they're even profitable. It shows they're profitable, but then they have no cash flow, and then their valuations are like trash, really. It's pretty standard when looking at a bank. The main factors that I found really is the cash flow, which I'm not surprised where the SEC all of a sudden wanted to do um, some rules and implement some new rules based on having a certain amount of cash. I don't know if they're doing by amount, percentage, or both, or if um, it also deals with liquidity. I mean, there's just a whole mess with policy that I don't even want to deal with when it comes to that. When it comes to rules and all that, uh, there's always some uh, difficulty when there's new changes. So good luck with that for the banks who are actually involved in the business. So anyhow, I see a second bank run coming. Eventually, I can't say when. I don't know when, to be honest. I'm just going with the flow. Um, it is what it is. If I do see any signs, then you know, early warning. So make sure I'm up. It's kind of late. It is 10:02. It is October 26, 2023. 10:02 p.m. Thursday here on the East Coast. So we have, again, ticker symbol RF, and then we have this share price at 14.43 cents. Markets are closed. Market cap is at 13.5 billion. Volume is pretty active. I don't know why. That's very, very strange. I find that very, very strange to see high volume on a bank. Very, very strange. So anyhow, we have earnings at 2.4, dividend at not even $1, yield, PE very low, 52-week high and low, $10 difference. Barely a $10 difference. Just barely. These numbers aren't like wowing me. They're not really interesting. I don't think they're interesting to anybody, but I'm gonna go over them anyway. So looking at the chart, we have here a 1 day. No, I want to look at a 5 year. Let's look at a 5 year. So it's going back to its 2020 highs. Maximum chart. So, yep. Very, very strong move ever since August. I mean, by the amount, looking from this all the way to that, it doesn't seem like much, a $5 difference. But if you didn't know the price and this price was hidden, that was hidden, just looking at the move itself, that is a pretty strong move down. So definitely breaking new lows, and I see it going to lower prices than that. I don't even want to read the news on the banks because, like I said, I'm already expecting in 2024. I don't know Q1, Q2. I don't know, and I don't care. I don't like investing in banks anyway. I do like financials selectively. Wall Street's gonna copycat off of me and say, "Oh yeah, you know, we're selectively liking the financials as well. We don't like the banks, but obviously we do like certain financials." This is why I like to keep my mouth shut, because they're just gonna play it safe and go off of the people that are doing their homework, like me, and then piggyback right off of me and try to take the credit. So that's why sometimes I like to keep my mouth shut. I'll say something in general, but I won't detail it, and it's just because I do my homework. I know what I'm doing. I like what I do, and then on top of that, I put in the work. Wall Streeters don't typically. So I mean, not I wouldn't say, I'm not gonna say all, but majority of them don't. So we have here dividend price at 24 cents. We have, let's see, a slight raise. I mean, only a 2 cent raise. Then we have here 3 cents and then 4 cents. I mean, Is this a good company? Is it investable? Right off the bat, I'm gonna say no. Look at these earnings going down, especially since the bank run happened this year. What is their market cap? Obviously, a $13 billion company. They're gonna have to get bought out. Hopefully, they don't go bankrupt and into a delist mode. But I'd rather get acquired than get delisted. That's for sure. I'm not getting any annual results or reports, so I apologize from my end. Again, I'm probably having technical difficulties, so I'm going to reopen that page. So please bear with me so I can get some data here. So looking at the financials again, we have here annual. There we go. Just a little difficulty sometimes. They just get stuck. ROA, I mean, we're coming too close to 2023, so I'd love to compare the last 5 years because 2020, obviously, monster year in 2021. 2022 was the start of, the down year, so hopefully in 2023, we can see some real changes. So ROE is at 13%. Earnings 2022 have dropped. Margins dropped, obviously. Debt slightly went up from 2021 or 1%. Pretty typical, high 80s, low 90s to have that debt level. Cash reserves, we're going to find that out pretty soon. Net income has dropped. Revenue, I'm assuming slightly went up. Operating income, I don't know and I don't care. Balance sheet is at 89%, obvious. So operating at 3 billion. Wow. Investing at about 13. So you have about 10 billion. So they are negative 18 billion in cash flow. Can you believe that? Negative 18 billion in cash flow. Now, will their net income even cover that? Highly doubt it. So basically, even if they use their income for 2022, they are negative 16 billion in cash flow. Horrible, horrible, horrible. So this company, definitely do not add to your watch list. They're trash. I don't know what's going to happen to this company. I don't know how this company is still profitable and on its feet. I just don't get it. I think it's got to be the federal government having cash reserves or something to help them out because the company's awful. So scratch that one off your list if you have it. Don't even think about adding it to a watch list. If you have shares, I recommend you get rid of them. Company's awful. Next one up, WSBC. WSBC. So market cap is at 1 billion. Earnings is at 3. Slightly undervalued to fairly valued. Let's look at that chart. So 5-year starting to go to new lows for the year. Heading towards that direction. Now we want to see analysis for recent quarter. So we have 75% hold. Only one said buy. Earnings have been dropping. I'm not surprised, going lower and lower, considering the so non-GAAP and GAAP earnings. I don't think it makes much of a difference. slightly. But again, a miss is a miss and a beat is a beat. So key indicators for assets, 1%. Return on equity, 7.5, dropped a lot. So almost 2% from 2021. Earnings is at 3. Margins are dropped to about 9%, but a total of 20%. Debt is at 85, and still going through this. Net income 192 million, revenue of 590, close to 6. So cash flow. So what we have 204 or negative 1 billion. I just don't get it. So 220. So they're at least 780 million. 780 million. So probably to be exact, over a billion, probably 1.04. So this is the number that I'm looking at. Negative 1.4 in cash flow. Awful company. Get them off your watch list. Trash. Move on to the next one. Last one up that we have is HFBL, Home Fed Bancorp. Oh, ugly chart. Ugly, ugly chart. Look at these drops. Look at that drop. New lows. And then kind of went up here, and then now it's just going to that downtrend. Horrible. So looking at the market cap at 39 million, this company has some serious work that needs to be done unless they're going to be bought out. Market cap of 40 million. You can only hope. 1.80 earnings. They shouldn't even pay a dividend, to be honest. And so, company looks awful. I didn't even go over any of the quants because automatically, if they're both fundamentally weak and technically weak, it makes no sense for me to even go to the third category, the third factor, to even consider this company or other companies for that matter. So financials, we have not even 1%, 11% for the return on equity. Margins 24%, up and down, so they didn't do too bad for 2023. The debt is at 92%. Net income 5.7, revenue 23. It's all about the cash flow. Compared to other banks, it don't look too bad, but that debt is at 92%. So operating cash flow at 12 mil. So we're looking at least about 100 million. So they're in the hole about 40 million. Negative 40 million. Now, can they cover that with their net income? Not even. They're down negative 35 million in cash flow. So got a lot of work to do. That's almost as much as their market cap. Makes no sense whatsoever. No sense. Awful companies, all three of them. There you have it. Thank you guys for watching. I'll see you guys soon in the next one. And stay smart. Invest smart. There's not too many good people out there. So happy investing. See you guys in the next one.